Yo, welcome back to another market review. Today's October 28th, 2023. It's the end of the week. Markets are not trading, and so here we are reviewing price and what it did throughout this week. And here we are, or where we are, I should rather say, on our monthly, weekly, daily, our fractal price. Simple as that. Today's market review will be directly correlated to the topic of being different. What do I mean by this? Well, you have plumbers, you have technicians, you have nurses, doctors, dentists, hygienists, biologists, marine biologists who drive their car into water for work, and a bunch of different other, well, careers and walks of life. There's so many different things. Um, there's so many different things, and that's the whole point of it. It's being different. Who are you around? Who are you giving your time to? What are you doing to impact your life and to do what you want to do what you want to pursue? There's a saying that says, if you knew you couldn't fail, what would you do? Well, here we are, trading the markets without fail. Well, with fail sometimes, but more times than not, without. Um, you have to be different in order to uh, cut yourself from a different cloth. It doesn't just happen. You don't cut a cut in the cloth doesn't just happen. You have to manually go in there and cut those lines, cut those edges, draw the lines, you know. And so, before I even get into this topic, it's who are you spending time with? Who are you splitting bread with? Who are you giving your energy to? Because who you give your energy to determines who you will be in the future, who you will become. Being around a bunch of gamers, are you any different? No. Being around a bunch of cavemen, are you any different? No, you're going to become a caveman. You're hanging around market traders that are consistently profitable and can do this consistently. What are you going to become? Well, kind of just about that answer out for you. Um, so, with that being said, I'm very thankful and grateful and glad the people that have shown interest and that are here wanting to learn and pursuing this as their career, as their lifestyle, because it's truly a lucrative lifestyle. Um, but I do not want to promote the idea of Lambo lifestyle. And, you know, I have the big bucks. I'm trying to present a way of thinking that is um, making ends meet with this career. It's not just straight up, oh, I'm hitting a home run overnight and um, boom, I'm rich. It's consistent. It's continuous. It's not just a one night stand. And we will get into that and more in depth as we progress into this lecture. So, that being said, let's get into price action. All right, updating the monthly time frame. Starting down with the top down. This is what we'll always do when we get into these market reviews. It is starting from the monthly down to the weekly, daily, and so on. So starting with none other than the monthly. Um, I told you at the beginning of the month what my target was, and for those of you that don't remember, just go back on my Instagram, my highlight page. It's a little stock emoji. That's the increase, the bull. I should have really put the down one because, I was expecting this right here, 14,578 and 3/4. Go back into my old videos too, my old market reviews. There's the one on the 22nd that I posted. I spelled it out there before we went into this week, but just a little recap of monthly. It's not that long. We close outside this fair value gap from this candle's high to this candle's low. It now classifies as an inversion fair value gap. I want to see this range act as resistance. And here we go. Climb up to it into the about 75 or third quadrant. So if we're splitting this into a half and then into fours, it came into that third fourth right there and then delivered sharply down to the downside. There's this candle's opening price right here that I was looking at, the monthly bear bullish order block at 41.84, and sell side liquidity resting below this candle's low at 41.33 and a quarter. This is all spouts out before it happened and ended up unplaying just like this, foretold. And yeah, same thing with the Nasdaq. I drew your attention to 14,578 and three quarters at the beginning of the month. We had the Judas swing, which was the fake move at the beginning of the month. We had this candle looking like a purple candle. I hope you guys are liking the festivity candles or candle, the chart, I should say. It's spooky season, so I had to get in spirit. But here we are, Nasdaq come up. I was expecting price to, touch this monthly bearish order block, the opening price right here, the last up close candle before consecutive down close, a change in the state of delivery. However, when we get down to the weekly chart, you'll see exactly why price came up to here instead. And so came up, rallied back down, and got our target. Now we're looking at take this candle's low to this candle's high, cut it in half. That's the consequent encroachment or the midpoint of that imbalance. I'm watching 14,088 as well as the entire range of that being filled. So 13,597 is another one. There's sell side liquidity resting below this candle's low, levels right there, as well as a predominant low on the monthly down here at 12,172 and a half. Do I think we'll get there? Probably not. It's going to take some time to get there if we do so, but I do think that these two numbers right here are serious factors and contenders for the drawn liquidity. As for ES, we already got our sell side liquidity pull at 41.33 and a quarter. Now I'm watching this candle's low right here at 39.23 and a half, as well as this tail, which is the wick from this candle's open to the low, the wick, that's the tail. That consequent encroachment are the midpoint of those 2 points. So that lies at 4,001 and a quarter. So we'll see how we trade there when we get there. All right. This is the monthly chart from my charter Discord. Uh, I said ES leading the downside delivery. We are currently finding support from the monthly bullish order block at 41.84. So this is what price looked like before we rated sell side liquidity. Um, we did find support at first, and you wouldn't know that unless you're looking at it live at the time of price being delivered there. I said there are sell stops at 41.33, which I am of the belief that we are reaching for. So coming back, 41.33 and a quarter. That's this candle's low right here. And I said in NQ, I'd like to see the monthly BISI from 14,578 and three quarters to 13,597 be rebalanced or just filled. I'm also watching the consequent encroachment. That's exactly what I just spelled out at 14,088. So same ideas. I just outlined it. It's just being told live before it happens at October 26th, 5 a.m. prior to New York session. So yeah, getting down to the weekly chart. I'm going to start with the NASDAQ as I just covered why price came up here instead of the monthly bearish order block exactly. So here we are. That's actually in the daily time frame. My bad. Um, but it has to do with the weekly as well. And all right, so funny enough, as I say that, coming back here, as price didn't reach into this range, and why price overshot this little fair value gap here on the weekly. So from this candle's low to this candle's high, we come up, color outside of it, which is completely permissible. Look at where we close instead. Next candle, come up to the high end of that range just about, and look at the close. Voila. This will make sense on a daily chart. But firstly, I want to talk about this immediate rebalance right here, labeled IR. So immediate rebalance, that's what it stands for. When price creates an inefficiency like this, you can expect it to come back up and fill the imbalance that it left. That's the market right there. That's the thing. Sells liquidity and inefficiencies. Two things. That's all you need to watch. Whereas liquidity above old highs, below old lows, and inefficiencies, those are the ones you're going to have to train your eye to see, like this candle's high and this candle's low. All right. So we come just short of 14,578 and 3/4. Man, I'm gonna have to be saying that number a lot, but you get me. I'm just gonna say our quarterly target. All right, that's what I'm talking about. Our quarterly target. We fall short of our quarterly target, rally back up into this weekly SIBI, fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency, SIBI, and then come down lower. Now it leaves the potential for a fair value gap here. At the open of this candle, there is a huge gap, much like this right here. And so when price comes up to it, touches it immediately, or touches it, and then immediately shoots off of it, that is an immediate rebalance. So it's immediately rebalanced. That's put simply. Right here, it gets rebalanced on this candle. That range is filled entirely. And so you're looking at a balanced price range, a balanced price range. This is an immediate rebalance. And when you see that, expect price to strongly surge off of it, which it does here, and refills this entire range from this candle's high to this candle's low. I brought your attention to this on Instagram on Thursday morning, probably like around 6 o'clock before all this happened. I said um, we should be looking at 14,250 as a good draw for lower prices. And that's what I'm referring to is this candle's high. All right, so ES, see how it does leave an inefficiency versus NASDAQ, right? So this week we took out May 22nd to May 26th, that weekly low. That's this candle right here. So created all the way back in the month of May 2023. Takes a good amount of time for it to come back. Now all you have to do is allow time to happen. Price is going to do exactly what it always does. It's running on the algorithm. What did I just say the algorithm is? Liquidity and inefficiencies. That's what it is. So comes back, runs through the weekly bullish order block, takes out this candle's low, which is a predominant low. Why this one? Because there's also an imbalance resting underneath it that still had to be filled. What imbalance? This candle's high to this candle's low. Why isn't that whole range marked? Because a good chunk or a good portion of that imbalance has already been rebalanced by these two candles right here. Yeah, I'm running out of breath. Hold on. All right. So what's remaining? This little range right here, and that's what I have marked. So that's why I'm interested in your May 2023, that candle's low on the monthly right here, as well as a small inefficiency residing below it. So comes up, overshoots it a bit, rebalances the rest of that, so it is completely balanced now, and then shoots back up. Here it is in my Discord on the weekly chart analysis before it happens, so you could see prices before the weekly bullish order block here, and uh, just short of your 14,250 target. So in ES, I said I really loved how we are delivering in this index. 41.64 and 3/4 is bound to find some support, but ultimately want to see it bend the knee and reach into 41.33 and 1/4 and fill the rest of the weekly fair value gap imbalance to 41.27. So that's this candle's high right here. And what does it do? I mean, it's it's like some magic, right? Like a little magic trick, calling it before it happens. And it delivers perfectly. So in the NASDAQ, I said we are filling the quarterly objective target from our quarterly objective at 14,578 and 3/4 to 14,250. That's this weekly BISI. fair value gap in the form of a buy side imbalance, sell side inefficiency. I said I ultimately want to see a deep retracement to take out sell stops at 14,889. This was supposed to be buy stops actually, as well as the weekly BISI residing beneath it. So bringing you back here, this weekly BISI, this candle's low to this candle's high. That's what I'm searching for on the weekly chart. Your monthly BISI low is at 13,597 right here. All right, overzealous target right here, same level. Moving down to the daily, I'm firstly going to start with NASDAQ again. As I said, this wick that's permissible right here in price action, and you want to see, wicks do the damage in your bodies. We'll tell you the story. Getting down to the daily, you could see that price came up, overshot it, came into this daily inversion fair value gap, as well as this little inefficiency right here in the form of a SIBI. So this candle's low, this candle's open. That's fair value gap. Price comes up, wicks a little bit up into it as there is buy side above these candles highs right here. Man, why are these just random old highs right here? Well, this is a daily chart. It takes a lot of time for price to go from here to this lower high to a lower low, all the way back to a lower high. Matter of fact, we can count them, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29. That's a whole month of price action right there. That's not fast. It's a lot of time. And so respectively, when you're looking at these time frames, you have to understand how long it will take for each candle to paint. All right, that's the time and price continuum. Knowing how long each candle takes for it to reach into a certain range, understanding the range of each candle within that time frame. We're seeing some massive spurges in price in monthly charts because it contains price throughout a whole month versus, you're looking at a month or a minute chart and you're only looking at, 100 handles max. So you have to understand what you're looking at and what it means. So with that being said, price comes up to this daily bearish order block. I covered this in the last market review. Overshoots that by a bit to raid liquidity before continuing lower. Now, like I did cover in my first market review, how up close candles should be respected in a down move and down close candles should pump prices higher in an up move. Up close candle comes back up to it, respects it. Up close candle goes away from it, come back up, respect it. Closes outside of that range on this candle. The next candle comes back up, respects it, moves back down. 2 consecutive up close candles, and just 2 massive downside delivery candles. So this is a down move right here. What is it reaching for? Liquidity resting beneath these 2 relative equal lows. So that's the fake double bottom. I covered that in my last market review, the October 22nd one. Raise it and comes back up, touches this little fair value gap right here. There's also a volume imbalance from this candle's close to this candle's open. No price, no trades being taken in between. How does price gap right here? Well, tell you what, it's not buying and selling pressure. There's an algorithm. It's controlled, it's rigged, and so comes back up, refills that imbalance, as well as digs into this fair value gap from this candle's low to this candle's high. Once again, that's all that remains from that. That's why that's marked like that. And then proceeds to deliver lower and fills the weekly BISI right here. Same range, 14,578 and 3/4 to 14,250. I don't need to say it. ES, same thing. We dig into imbalance before delivering lower. SIBI right here. See this candle dig into it before ultimately bending the knee and delivering lower and taking out higher time frame sell stops. And that purple range right there is your weekly inefficiency that was marked right here. That was remaining. So same range. In the NASDAQ, we overshot the imbalance a little bit. We're still in a monthly BISI, so that's from this candle, this level at 14,578 and 3/4 to 13,597. That is just one range on the monthly chart. On the daily, we dug during this time into this little fair value gap within that range. Get it? All right. So this candle's high, this candle's low. We dig into it, almost fill it entirely. So there's just a small little bit remaining. There's still side residing beneath this candle's low, as well as a small little inefficiency beneath it. Um, should we, rate it with speed and distance, I ultimately think that we will see this low get taken out, as well as this weekly BISI be balanced. I am ultimately of the belief that we will come down to 13,597 right here, monthly BISI low. We have to take out 14,088, which is the midpoint of these two ranges, respectively, to get there. All right, now let's get into some of the weekly price action. So this white line right here, and in the, I was about to say the NASDAQ, and in ES is the start of the week. Sunday's open at 6 o'clock. This candle right before it is Friday's close at 5 o'clock. Exactly. So this is an hourly chart. What you're seeing on each candle is 1 hour. So from 6 to 7, this is the start of the 7 to 8, start of 8 to 9, 9 to 10, and so on. You get it? That's what these candles represent. Time and price. This candle's closed, so this candle's open. There's a huge gap, new week opening gaps. But I mainly want to focus on just intraday volatility and how price is constantly taking out old highs and old lows. So at the start of the week, I saw these relative equal highs be formed. And that's why I was interested in 14,887 and 3/4. I pointed your attention to them when price was here and when we were around this area. I still had that belief that this is way too clean, and clean edges like to be made jagged in the market. So here we are. I'm going to start with the NASDAQ. It's kind of like the motto of this video, I guess. We come down, make a low, dig into our monthly BISI high right here. Reach our objective. We rally up, and then boom, there goes sell stops just like that before a quick rally higher. Comes back to this little inefficiency right here, fair value gap. Here we go. We're rallying outside of it. We're making this little trend line support that retail is going to love right here. See, oh, trend line support. As soon as price comes into this trend line, we're finding support from it. It's all bullshit. You can see how price supported it right here, or that trend line supported price right here. It's all bullshit. Don't believe it. We had everyone profitable from this move get stopped out here, and then we come up and take out the buy side liquidity from everyone profitable short. What does it do right after? Turns the table, flips the switch, delivers back down. And so before every up move and before every down move, there is a raid on the opposing side of liquidity. I was going to say opposite, but the opposing side of liquidity. That's what this is here. We have that raid. Well, ES came up, touched this candle's opening price. also takes out these relative equal highs right here. Take a line that's textbook double top right there. Just like there's a double bottom right here, and price takes it out and then proceeds to take out the double bottom. So this is constantly happening in the market. Liquidities, inefficiencies, those are the two main things that price is always going to do. It's going to attack liquidity and rebalance inefficiencies. So back to what I was saying. In the NASDAQ, we have this we just talked about, and then we drop lower, create a little SIBI right here. Price comes up to it once, drops lower, fails to take it out. What does it do? Comes back into this range once more, and then aggressively sells off, targeting what? Monday's low, the low of the week so far, right? Take that out with speed and power, and then the following day we gap down, create a volume imbalance. Now this volume imbalance and this volume imbalance are created at the same exact time. You can see how in ES it's the leader on the downside. I mentioned that on the monthly chart and how the ES has been leading down. As you can see that price only fills about a fourth of this range versus the NASDAQ when it came up, it almost rebalanced the entire range. And I drew your attention to this too on Thursday, I believe. Welcome to go and check. It's all in my highlights. Nothing's ever deleted. Nothing's ever edited. It's full credential, full proof. It's all there. Now, after that happens, we sell off aggressively, take out this low, and rebalance that weekly BISI. Overshoot it a little bit, but why would we show? Why did we overshoot it? That daily BISI. Go back in the video, and you'll see what I'm talking about. Next day, we gap up, rally up higher, create a high, which takes out this candle's high right here, which is a 15-minute high, which we'll get to on the next presentation, before folding and rebalancing this entire range. So now this candle's opening price and this candle's low, or the open, I should say. So this candle's closed and this candle's open. That's what I'm measuring. It just so happens to be the low as well. But this candle's open comes in at 14,212 and a quarter. And this candle's low that rebalances it comes all the way back down to 14,212 and a quarter. That's algorithmic. That's not random. That's straight up perfect delivery. In the ES, we had the same exact, not same exact, but we had a similar sell-off day where we were reaching for May's low at 41.33 and a quarter. Now, let's get into the mad specifics of it. The 15-minute chart. This is our bellwether chart. This is how we measure intraday highs and lows, but it's not too big enough to see the bigger picture. Like you can with the hourly, you could see the entire weekly range on a half screen like this. So you could see up to one weekly candle, 5 daily candles, and so on. Versus your 15-minute time frame is mainly used for cutting up the hours. Now, this volume imbalance up here is the gap down on both days, and this lower one down here is the gap up. So let's go back. The gap down, the gap up. I don't have it marked on this hourly time frame, but it is here in the 15. So this candle's high as well as this candle's high are the same. You can see a symmetrical market going on right here. We have a high, lower high, lower high. In the NASDAQ, we have a high, a lower high, and then another lower high. Now, when price does come back up, we leave relative equal lows here, but mainly we create a new high in the NASDAQ versus in ES, we failed to do so. So those two highs right here that we have marked are the same exact time. What's different? Well, they're not in symmetry anymore. And so when this happens, this is dubbed a smart money technique. And this is kind of like a tip of the hand of where the market's going to go next. So all ES was doing, or my bad, all the NASDAQ was doing was purging liquidity above old high to get ready for a sharp move lower, while ES was maintaining its market structure and climbing lower and leading. So this is the leader on the downside, so you don't expect this to make another high. As it's selling off, you could trade its sister with the expectation that it's likely to follow in tandem with its sister. Now, ES 15 minute, we have a high, a low, a higher high. That lowest down close candle in between, that is a bearish breaker. It is of the order of order blocks, or of the category of order blocks, I should say. This is a bearish breaker. When price does come back up to it, you should see true resistance be found. Don't take my word for it. Go in your charts and find examples of this happening and see if what it is I'm talking about is true or not. So we come down, rebalance this volume imbalance, bounce up, go to the high end of this range, bearish order block right here. Look at the bodies. Sell off aggressively, taking out this low, failing to get to this one. Create a double bottom illusion. Comes back up once more to this candle's low. You can see how we wick it, but ultimately close outside of even the breaker range. Create an imbalance. Price comes up into it and sells off aggressively. Comes back up, touches this candle's opening price. That's a bearish order block. And then sells off aggressively into our targets of 41.33 and a quarter. In the NASDAQ, same thing. We purge buy stops opposing liquidity and then sell off. There's more to be uncovered here, and we'll talk about this on the 1 minute chart, but you can see how this is the start of the down move. We have an up close candle, a down close, an up close. This one is the one that rebalances price within a smaller time frame. Also touches this candle's opening price, wicks past it into almost mean threshold, which is the midpoint of this candle, before ultimately bending the knee and rebalancing this entire volume imbalance. Now, it did not make a new low, which would have happened if it took out this low here, like ES did, and we ended up closing within the range of our weekly BISI. So this is, or I should rather say this part, is a wick that you're going to see on the weekly chart, but ultimately the close is within that range. All right, hopping down to the 15-minute chart, or 5-minute chart. This is your 15-minute bearish breaker we just outlined. Nothing very predominant here in the 5-minute. Actually, nothing at all that I'm really looking at. Um, However, in the NASDAQ, I want to draw your attention to this small inefficiency right here. So nothing's changed, except now we're dropping down on lower time frame. It's the same volume imbalance, 14,250, same level. Here's our 15-minute bearish order block. That's this level right here. As soon as we trade outside of it, come back up, touch it, and then sell off aggressively into the relative equal lows here. But keep in mind this candle's high and this candle's, I said that backwards. This candle's low and this candle's high. All right, dropping down to the minute. This is Friday's price action at 9:30 to 10:30. We had news at 10 o'clock. So what can you expect the price to do on these red news drivers? Chop you up, have a lot of increased volatility, but ultimately go nowhere sometimes. Uh, this news driver was Michigan consumer sentiment. It wasn't one of the big ones like NFP and CPI and FOMC, but it's still a red news driver. You should not be trading these until the fog clears. How do you know the fog's cleared? Look at this. Back and forth, back and forth, back and forth, back and forth until about 10:30, where price does rally higher one last time, but aggressively sweeps lower to take out these relative equal lows here. Once opposing liquidity is taken out, you can go the opposite direction. Now, is there anything in price here that would constitute you going long here? I'm going to submit that there's not. And so you as a trader have to have no FOMO and no fear of missing out on these types of moves. Because as although price does rally a good amount of handles here, it's like 200, or I should say about 100, but that's a lot of handles. Don't take it lightly. You have to just be able to sit on your hands and wait for the setup to come. You can't force anything. Like if you were to force stuff in here, you're gonna get chopped up and ate out, and the markets are just gonna take stuff from you that you're not gonna be happy about after it happens. But if you get it right, ooh, yes, I did it right. Ooh, but all you really did was just get lucky. And the fact that you got it right is gonna entice you to want to do it again. This time more risk because I can, and that's dangerous. That's very dangerous thinking in a uh, industry where you have to protect your pot. You have to. You have to protect your gold. And so not overexposing yourself or putting yourself in trades where conditions are not very clear. That's what you need to learn how to avoid and control as a trader, um, as the operator, as the one that's going to be able to push these buttons and decide your success or your failure. You need to know when your time of entry is clear and valid versus when it's just your eagerness to get in and want to be right about something. So NES, we had this low as well as this high right here made during that time frame. We take out the sell stops first before expanding higher into your 15-minute breaker. That's this purple range right here. Drop lower, create a little SIBI, come back up. We wick outside of it a little bit, but look at where the body's closed ultimately. And we're going to get into this the on the more right hand side of the screen because I just wanted to draw your attention to the news driver here, and hopefully you heeded some advice from that to not trade red news drivers. Just sit on your hands and be patient. This red line down here is your relative equal lows. No different. Look at the chop versus this nice and clean price action here. Which one would you rather trade? I'm going to humbly say that this is the move that I want to trade right here. And you can. So, with that being said, let's get into the brass tacks of it. SMT divergence. ES makes a high and then a lower high. What is ES? What did I say it's been? The leader in the downside. In the NASDAQ, we made a high and then a higher high. What does it do before that? It makes a low that rebalances this little inefficiency and then comes back up to take out buy stops. So that's an SMT divergence, smart money technique or tool. I call it smart money tip. It just gives you a little tip of where price is going. And so this is a model that you can use in price and expect outcome to come out of it the, um, when it happens. So this is dubbed model 22 here. Um, we have a high, low, higher high, lowest down close candle in between. That's your bearish breaker. It's the same premise as the 15-minute one in this purple range right here, just now on a 1-minute chart. Price comes up, rallies down. When price takes out this low right here, I am looking for a fair value gap to form. That's why I have these two little price notes right here from 14,382. That's this candle's low to this candle's high at 14,381 and a quarter. When price comes into that fair value gap, I am ready to go short. Stop loss above this bearish breaker, one tick above it. So as you can see, price ran away at first, and that might scare a new trader and someone that wants to chase price. Oh, why can't I have just got in when it was up here? Because you don't know it's gonna go right back up or not. You have to let price tip its hand to you. And that's what these models are all about. When you see them form, it's tipping its hand saying, I'm getting ready to do something. And you are just hopping on for the ride. And so price eventually comes right back up to this range. Um, this candle's high comes in at 14,382. So delivers perfectly to the tick. And then from there, look at the reaction we get. The next candle already puts us in profit. Comes back up to this bearish order block's opening price. Folds the knee, comes up, this candle's high to this candle's low, extend that out, inversion fair value gap once it closes underneath it, just like I mentioned in the monthly, that monthly chart, comes back up to it, ticks it, and then runs down to this little BISI right here. So this candle's high and the low end of this fair value gap comes in at 14,342 and a quarter. I don't know about you, but 40 handles in the NASDAQ is easy bread. Each tick is 50 cents every handle. So 14,382 to 14,381 is $2. If you would have had just one contract from 14,382 to the low end at 14,342, just about, that's $80 right there with one contract. The crazy thing is that you can use 10 contracts, 30 contracts, 50 contracts, all depending on what you're able to affordably risk. And that's the beauty of this industry. It's scalable. No one's determining how much you can make except yourself and what you can tolerate. All right. So, with that being said, just this move in itself was enough for ends to be made here. You get this setup and you get it 3 times a week. That's all you need. A part-time job where you're working 20 hours a week, you're getting the same. You're replacing that. Now, if you do them together in confluence, you're doubling your income. And the more you're able to do this consistently, the more you'll be able to scale up and leave it and just leave it. Leave the rat race. Leave the system. Leave the employee life. So I don't know about you, but I'm not working for anyone else. I'm not. I'm simply not. I can't imagine having someone telling me what to do all the time and having to beg for time off when I need to go on a vacation or I want to go on vacation. I want to get out of here. I'm not relying on anyone else to make money for me except me. And that flies over the head of too many people in this current generation. Not just this current generation, but society as a whole. It just flies right over it, and they're stuck in a race between rats that they just can't escape from. They're going nowhere. They're just running, running, running to a bunch of nowhere land. Fucking Peter Pan's not coming for you, buddy. So learn this skill while you can. I'll talk more about this, but first I'm going to get into the rest of price here. So comes back up. You might think, oh, price just reversed from there. All I did was take out liquidity already and rebalance the inefficiency. Well, yeah, I did do that, but when price does come up here, I'm looking to pyramid. I'm adding on to my position. I see that ES has even failed to make a new high. It's lagging. And so I'm selling again here. Price comes down, comes back up. Another short opportunity here. Sharp retracement lower here, or sharp down close candle here. Up close candle that fails to make a new high. That's exactly what you want to see. And then from there, we keep on making lower highs, lower highs, lower highs, lower highs until we finally bend the knee, come lower here. Price comes up to this bearish order block's opening price. Wick does the damage, body tells the story, leaves a fair value gap in the form of a SIBI here, comes back into consequent encroachment or the midpoint of that range, drops lower. You could trim partials here. Price comes back up into order block. Oh, before I say that, actually, when price comes here, you could trade or stop above the last order block with the expectation that these up close candles will hold price at bay in a down move. So price comes up, touches it once, twice, three, four times before leaving a fair value gap that breaks this short-term low and doesn't ever come back into on the run to liquidity here. So that gap, that fair value gap here becomes a breakaway gap. It doesn't get retraded to. That's the whole premise of a breakaway gap. Runs lower, order block gets created here. As soon as price closes outside of that range, comes up, touches it, closes, opens, high touches that exact price, and then bends the knee. Low consolidation at the end of your lunch hour, but ultimately runs to those relative equal lows. Now, within this time right here, this is considered a macro. What is a macro? It is a specific time where price likes to spool to a specific point. What do I mean? Well, there are specific times throughout the day, like this one on here, from 11:35 to 11:45. That is a time macro. It's the algorithm punching in orders and getting ready for a move. And so when price comes up into this fair value gaps high, from that candle's time, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. 80 bucks in 9 minutes. Did your job allow you to do that for you? I'm asking sincerely, does it allow you to get paid $80 in 9 minutes? Let's round it to 10 minutes. You get paid $15 an hour. That's minimum wage. Well, 15.50. Let's just say 15 because Uncle Sam. If you get $80 in 10 minutes, you just did 5 hours of work in 10 minutes. I don't know about you, but I'm calling out after I'm able to do this consistently. But I'm done. I'm done knowing that this is here, and all I have to do is go get it. Just go get it. It's simple as that. Go get this skill. But no, A lot of other shit has your attention. It has you by the motherfucking ball sack. It's got your attention like fucking. It's all over you like white on rice. What am I talking about? There's the same 24 hours of the day. The market is trading 23 of them, Monday through Friday, futures. These setups and models, one that I just outlined right here, these form at very specific times. You don't have to be looking at price 23 hours. You can only really look at price for 4 hours a day, 2 hours, 1 hour, when you expect your price to form, when you're set up to form. And it's 5 days a week. It's never stopping. It's always there. It's it's just like a job. You have a shift from 2 to 7, from 9 to 5. You're gonna show up at 9, leave at 5. It's the same shit with the market. There are specific times, like I just outlined here, that price forms your model, and you can expect to look for them during very specific times of the day. And so, what does this allow? Why am I even bringing this out? You have the same 24 hours in the day, and I don't know about you, but I want to spend them using it. I want to spend those 24 hours doing things that are fun, things that I enjoy, and having the freedom to do so without worry, without having to stress the next day about going into work, about, ah, man, my job is going to take another 8 hours of the day from me. Some of you, it's longer, 11, 12, 13, 14-hour days. I know some of you can relate to that. Think about how much can change in 10 minutes if you just learn this one skill and just get really, really good at it. I'm not asking a lot. Fuck it. This is for you. This isn't for me. It's fucking for you. I'm not doing this for me. You're the one that needs to go get this. And then once you get it, it's yours. What's your boss gonna tell you? No, the markets are random. Fuck no, I just proved that here today. It's algorithmically delivered. What else do you call 14,382 and price comes back up to that exact point? What the fuck? What the fuck else do you call it? Oh, my bad. I forgot to mention your 5-minute fair value gap right here, outlined in orange, and how price delivers to the high end of that too. Before fucking bending the knee. No Colin Kaepernick. It just fucking delivers. It's there. It's proven. I'm fucking calling this shit live before it happens, and then unfolding exactly how it's told. I excuse my language for this. I'm sorry. I don't know how else to emphasize this. It's not anyone else. It's just you. You have to put the effort in. And yeah, at first it's gonna suck. It's gonna be hard. You're not gonna get it. You're not gonna understand what a BISI is, or a SIBI, or a premium and discount, or a consequent encroachment and mean threshold. The fuck? What the fuck is this dude talking about, dude? Fucking jabbering on about this shit. But he's calling the markets, to the tick, and he's getting it right more times than not. It's doing this every week. It's been 3 weeks now. He's doing. That's your issue. That's your lack of understanding. Fuck, you didn't come out the womb knowing how to talk how you talk now. You're fucking wah 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 wah. What the fuck, like, bruh? You can't expect yourself to do this shit overnight. You have to put the work in. You have to go into the woodshed, just like I did. But I'm not gonna be able to take it from you once you get it. Fuck, no, I want to help you get there. I want to guide you to get there. I might want this fucking more than you. How does that make any sense, huh? Huh? How can I want it more than you want it? How can I want freedom for you more than you? I can't. It's gotta come from you. You gotta be different. Other people spend their 24 hours fucking drinking, partying, going to classes that are a total fucking scam, and they're gonna come out of a 4-year education paying debt for the next 30 years while it increases with interest. And so they're just paying more and more and having to work day in and day out and work their jobs until they're old and they don't have the freedom to go out on vacation. And if they do have time, it's twice a year. Fuck no. I am not living that lifestyle. Are you? If you are, just stop watching right now. Fuck, my words aren't obviously not getting through to your head. You want to be average, no, I'm not going to stop you. It's your life, not mine. It's your life. You're the one that makes the choices. You're the one that can choose. I'm just a fucking guider. No red school, but I can help you. I can hold that treasure. I can be that helping hand. But ultimately, you're the one that does the work. You are Thanos. You make that sacrifice. Because if you don't sacrifice for what you want becomes a sacrifice. So which one do you want to sacrifice? You want to give away 30 years of your life to some corporate job that can easily replace you if you're able to get the job in the first place through the application process and your degree does its job. I'm holding quotation marks in the air right now. Or you're going to learn this one thing and get really, really good at it. What's it going to be? Are you going to be the boss of your life, the CEO of your life? Are you going to run things with a intention and purpose and do everything like it's the last day of your life? Because that's how you should be living it. No other way. I don't see any other correct way to be living it. You got to be different than the rest. You got to set your boundaries. Draw the line. Some people don't know how to do that. And that sense of distraction, it's the it's the epitome. It's the enemy of success. They want you to be distracted. How do you use your phone? This little 6 inches of fun that you carry with you every single day. How are you using it? What's your screen time looking like? Is it Instagram for 4 hours, TikTok for three, Snapchat for two? Is that how you're spending your days? Just being a fucking hoe? Or are you going to commit to something and dedicate your time and energy and effort to something that's going to outlast and outpace inflation for the rest of your life? And you won't have to worry about money again because you know that you're going to be able to walk into these markets every single week, every single day, every single hour, and you can fuck it up. You can hurt people. Every time I take a trade on, I know that the other side of my trade is getting absolutely fucking destroyed. Absolutely booty clapped. Straight up violated. And I have no remorse from it. Zero remorse. They didn't do what I did to get to where I'm at now. So they don't deserve it. Simple as that. You can't think that this is going to happen overnight. But you take one step at a time. Think about it. One step at a time. How else do you climb a fucking staircase? How else do you fight an uphill battle? How else did the Spartans hold the Persians at bay with 300 warriors? One soldier at a time. Just kill one soldier at a time and let it stack up. And exponentially, you'll see growth that you didn't think was possible. All for the ultimate goal. freedom. Freedom. The freedom to do whatever you want, whenever you want, with whoever you want, in whatever way you please. It's so much more than just these markets, just these charts. It's insanely rich. Insane. Insanely rich. And it all comes from the 7 pounds in between those two ears. The only thing that's different from me and you is how we look at these charts. And yeah, I can outline price like I do here. I could show you everything that catches my eye. But if this chart was empty, would you see anything? Hmm. I'll leave you with some food for thought on that one. With that being said, I think I've jawboned long enough. Enjoy the rest of your weekend and be safe.